Hello, good afternoon. So thank you very much to everyone. We start with a traditional Portuguese tradition, which is more or less half an hour late. But you have to adapt to the local culture, I suppose. um, Very welcome to everybody, to the people watching in the streaming as well. So this is the Stables panel. Also, it's a global influence war, silent lobbying, a clash or an alliance. It's a bit cryptic, but since we are in crypto, I guess this amazing panel here is going to give us some great insights. My name is Gonçalo Reis. I'm head of investments at Stake Capital. And so today we are going to the panel will have four main sections if you want. So I will let these amazing guests introduce themselves and the companies they represent. Then we'll do sort of like a SWOT on the stables technology. So we'll discuss the strengths, the weaknesses, some of the threats and the opportunities. So you guys feel free to bring any topic you guys think is relevant. Then we'll play a little game. I will ask them to impersonate somebody and to put themselves in the shoes of somebody and tell us what they would do in that person's shoes vis-a-vis the stables. And we'll finish with a Q&A from the public. And I just heard that best questions can get some merch, but we'll get to that later. So welcome all. I would suggest starting with the ladies, of course. So Cherry, go away.
Hi. Oh, it's pretty loud. Hi, everybody. I'm Sherry. I'm the co-founder of a project called BlueJay Finance. We're building decentralized stables for Asia currencies. So this would be SGD, like Singapore dollar, JPY, like Japanese yen, and then the rest of the region as well. So we are going to actually launch soon on ETH mainnet. We've been in testnet for a couple of months on Rinkaby. I'm pretty excited to bring the foreign exchange market on-chain. Glad to be here.
And Stake Capital is an investor. Julien?
Yeah, my name is Julien Bouteloup. So I'm involved in a few different projects. Stake DAO, the asset manager. We have 300 million that we manage. On smart contract level. Rec News, the underlying, underground, dark side, investigative firm where we write articles about exploits and those type of things, and we make people happy in the space. Blackpool, the NFT hedge fund type of things where we invest massively, heavily in the NFT market, and we manage those assets such as Surveyor, for example. Then Stake Capital, the investment firm, and the quant. And today I have the cap of a project that I'm involved. I never found it. Run by Michael, Curve Finance. Yeah. Also about to release a stablecoin. That's why it's a good topic.
Hi guys, I'm Fernando Martinelli, founder of Balancer Protocol. We launched in 2020 as an AMM that allows you to have 8 tokens, not only 2, any like arbitrary weights, so you can have 80-20 pools, 30-30, 30-10, whatever you want. So the idea back then was to have like this automated market making protocol that rebalances your portfolio. And Balancer evolved to become a platform for AMMs. So with Balancer V2, anyone can create their own AMM and focus on the logic, on the invariant, on the innovation itself. And Balancer V2 takes care of all the low-level stuff, like all the accounting, all the token transfers, optimization, security. So we say that our mission is to accelerate innovation by providing secure infrastructure for liquidity applications. It doesn't have to be an AMM. It can be any liquidity application, a token generation event, like lots of stuff.
Yeah, hi everyone. I'm Roman. I'm one of the co-founders of Mento. And, oh, my microphone. First technical problems. So I'm one of the co-founders of Mento Labs. Mento is the stablecoin protocol behind the stablecoins that are natively on Celo. So yeah, for the past like 4 to 5 years, I worked as a core contributor to Cello, and initially Cello and Mento really was one thing. So in the original Cello white paper, the stablecoin protocol Mento was already laid out. So yeah, I've been working with the Cello team basically together in parallel on both of these aspects, the layer 1 Cello and the stablecoin protocol. We have, as of late, separated out the stablecoin protocol from the layer 1, more like a MakerDAO Ethereum type of approach. And yeah, happy to be now part of this dedicated team to drive Mento protocol in full focus.
All right. So as you can see, quite impressive panel. Yeah.
That's good. It's good. Just put the mic very close to the mouse.
Good. So the panel is introduced. I was going to suggest that since we might have some people that are maybe not 100% familiar with the stables concept, we would just do a SWOT of what the stable coin is and what stables are, and so maybe as a first step, I would just suggest if you guys wanted to just reflect on why stables and this fascinating piece of financial technology, what are its intrinsic advantages, strengths, and weaknesses. Let's start again with Sherry since.
Yeah, I guess maybe you can put stable coins in the context of how crypto has really evolved over the last couple of years. I mean, I think before 2018, I guess a lot of the base pairings that you would see would be made mostly with BTC and ETH. But what stables have really brought is essentially this synthetic on-chain that can be a stable medium of exchange, right? So you don't actually you can kind of hedge your volatility a little bit when you're trading, and so there was that kind of initial role that I think stablecoins really played. But I think beyond just the trading aspect, really having stablecoins exist is really how I think a lot of the protocols really grew during the last 2 years with DeFi Summer, right, starting in 2020 until now. And I think the thing that we've kind of learned is that there's almost this like cultural significance that we have with stablecoins, right? When you have something that's recognizable as a unit of account that you're used to using, it's a lot easier to kind of transact across these different services. So it's definitely a space that I think is a killer application or use case that's really come out. And I think will continue to grow different use cases.
That's for the strengths. Can you point out to any intrinsic weakness of the?
Yeah, I mean, I think there's no perfect stablecoin model, right? So just a little bit of, I guess, delineation of the industry, right? There's the decentralized algorithmic stablecoins. There are the crypto collateralized stablecoins like a DAI. And then there's, of course, the more centralized fiat-backed ones like USDC, Paxos, etc. Now, when you think about weaknesses, right, there's always going to be something that is an Achilles heel with each of these different models. So starting out with algo stablecoins, I mean, this is probably some of the classes that the classification known to UST or Terra, where during, I would say, a bull market time, right, extremely capital efficient because effectively you don't really actually have the asset backing necessary to kind of grow the supply. But when it comes to a more bear market situation, then you don't actually have the assets on your balance sheet to really kind of maintain that confidence, and so you have a bit of that bank run situation that can happen when you have an algo stablecoin model. So that's one of the weaknesses is that having the economics really cracked is particularly difficult. Now, the second class is more the crypto-backed stablecoin model. So I think the one that really pioneered in the space is MakerDAO or DAI, which takes effectively like a debt position where you can kind of over collateralize and mint DAI against that. Now, a lot safer, I would say, in terms of the model than maybe compared to algo stablecoins, but a lot less capital efficient, right? So it's a lot harder to scale. So those are some of the weaknesses I would say with that particular model. Now, the final one that I'll talk about is the centralized or fiat-backed ones. Now, those are fairly easy to understand, I would say, if you're talking about stablecoins to maybe a layman person who's not maybe as familiar with crypto. It's basically one for one. You have dollar fiat minting USDC, for instance, right? But a major weakness there that we know is actually censorship resistance, right? So if there's, an instance that happened recently, right, then you may or may not necessarily get that same kind of censorship resistance that we all really care about within the space. So I think depending on which model that you're looking at, there's always going to be some weakness, and you kind of have to, decide, what kind of trade-offs you want to make.
Very interesting. Julien, I think you already mentioned before Curve is planning to launch a stablecoin. Maybe a little bit more context on that, on the rationale, and what are the plans around it?
Sorry. Yeah. So basically, the idea of Curve and what Michael has envisioned in a drafting of the stablecoin is to have a stablecoin that is fully algorithmic, and so you cannot censor, and you can use the quite advanced mathematics and on the Curve strongness of the protocol to maintain the peg of the Curve stablecoin. So I guess normally it will be the strongest and one of the strongest stablecoin on the market, because it will be able to use the TVL of Curve. So we'll make a stablecoin that is pretty liquid on the market and can be redeemed quite easily. We'll have the concept of lending market, because you can mint against some LP tokens. So it's also a market that you could normally see an initiative that could see that tap into a market such as Aave, for example. Aave is a lending protocol where you can lend and borrow. Or if you have a stablecoin in Curve and you can mint a stablecoin using some LP tokens, you can also see the same structure model.
Very good. And if you use the classification of Cherry, how would you classify it in the three categories? What
Curve is one of the major protocols that is fully decentralized. So if you build a product on Curve internal on the protocol layer, we'll make this stablecoin fully algorithmic. So you cannot censor the stable, and you can also have access to full transparency. Because you said it well. There's one aspect that in centralized stablecoin, for example, like stablecoin that are backed by fiat, is usually you don't really know if the fiat is there on the balance sheet, because for them, if you maintain the balance sheet and the balance sheet is kind of like a black box, you can mint cash whatever you want. For example, there was a story about the SEC fining. That sent a fine to one of the protocol, one of the major stablecoin on the market. I think there was like 60 million or 66 million fine. I think that was very funny, but the protocol, the issuer of the stablecoin, mint on the next block 66 million. That's no problem. We can pay the fine. But the thing is, like, you don't really know if the cash is actually on the balance sheet. That's why we add major. Coinbase had to make a public statement. We had Gemini, we had all those different guys. So it's quite dangerous, but also it makes the market quite liquid because you have access to almost unlimited amount of capital. On the stablecoin, fully algorithmic one, then you have to trust the smart contract and you have to trust the implementation of the technology.
Will it be over collateralized?
It will be something.
Under over collateralized.
Under. Yeah.
Collateralized by trust.
You can have access to you can read the JavaScript SDK, but the white paper is coming in a couple of days, so I don't want to kill the job.
Nice, yeah.
Now.
Roman, maybe you want to add something to the strengths or weaknesses of the protocol? I think a lot have been said.
Yeah, definitely. I think I can just agree to the challenges you mentioned. I think when we set out to build Mento as part of kind of the Celo Layer 1 launch, we tried to find like the best of all of these worlds in like one setup, and that was definitely a challenge and still is, I think, for the entire space, right? To get these trade-offs right between kind of the things you can choose. And I mean, what we did with Mento here was we basically chose a model that is algorithmic in a sense, right? It's like fully decentralized. It has like, collateral working on chain via smart contracts. But at the same time, we made sure that we have a model that stays over collateralized as well. And that relies not only on, one native currency of Celo, for example, the Celo currency in the reserve, but also diversifies risks across like other collateral. So in the end, like that definitely made it much harder for us to build the thing, right? Because if you, for example, like Terra did it, just rely on your own, seniorage token in a sense, right? You can, of course, much more easily on your layer one have everything be, self-reliant in a sense, and you don't have to go cross-chain with anything. But of course, it then comes with a lot of drawbacks stability-wise. So yeah, definitely a lot of challenges here. I think the market or like the space is just also from a technical perspective to get ready to find better solutions here with cross-chain communication protocols, for example. You can now actually be fully decentralized and have kind of different types of collateral, right? That don't depend necessarily on all of this collateral living liquidly on the layer where you are, like the layer one you are.
I think it's good, and also because you guys can modify the way you're distributing the stablecoin, minting the stablecoin. You update. You made an update after the Terra situation, yeah.
Yes, I think we didn't necessarily make an update, but basically what we already said in like the original stability analysis that we put out before mainnet launch is that what we want to do with the reserve management side of things is to have something that we call dynamic hedging. That's kind of the term we use for this, and which is basically just something that tries to manage the risk of the reserve well, like traditional asset managers would do as well. And in a sense, it just works in a way that if the reserve ratio, the collateral ratio comes down to like a more critical point, then of course you need to take out some price risk out of this reserve. And what effectively that does, or like also did in this market environment, in which made sure that we stay well over collateralized, is we just moved more assets from Bitcoin and Ether into USDC and like more centralized stablecoins, right? Not something we are particularly excited about, right? We want to be as decentralized as possible, but of course, in different market phases, different risks are kind of getting bigger, right? And you need to balance these out. So we moved more,
baby steps, yeah.
Yeah, exactly. So we moved more into those more centralized stable coins to kind of take out market price risk, and if the market ticks up again, we can go the other way around, right? And expose the reserve to more market risk again. But yeah, then less, maybe tail risk that USDC and others contain, given that we don't really know how much money sits in bank accounts and stuff. I think you mentioned that's definitely right.
Very good. I don't know, Fernando, if you want to add something to the first part of the discussion of the strengths and weaknesses of the protocol, but
yeah, I think maybe Balancer is the only protocol here that is not directly involved with stablecoins. We're not creating a stablecoin. We want to really focus on like enabling stablecoins to like have a lot of liquidity, and we're trying to do like fewer things and do them very well. One thing kind of caught my attention, Roman, when you're saying like when you have like PCV, I don't know if it's the case, you have protocol controlled value that you kind of decide when to go like to more risky assets and when to. That's similar to Fei. I don't know if you know what Fei kind of wound down, but this is one thing Balancer does very well. If you have a protocol, some protocol value or protocol controlled value in your protocol, you can put that in a Balancer pool and say like you can do that either algorithmically based on like certain like volatility stats or market cap, whatever. You can say the market is going down, there's more risk. My portfolio here will automatically reduce its weight of ETH, of Rep BTC, because those are like risky, more volatile assets, and increase the weights of USDC and DAI. So Balancer is a protocol that allows you to do all of that algorithmically without having to go to exchanges and go to aggregators and do like lots of complicated stuff, because if you have a lot of money, you need multi-sigs, or you need a very good kind of permissioning system to handle that money, or maybe it's even immutable. So there's ways you can use Balancer to make it very slow. Like you can say, I want to go from 80-20 to 50-50 over a month and reduce my volatility kind of exposure. So yeah, just wanted to add that. And I'm a huge fan of stablecoins. Have been involved with the MakerDAO team very early on, yeah. So I can talk a lot about strengths like Jerry here, but I think most of them have been mentioned already.
Yeah, so maybe it's a good opportunity now that we have the basis of what are the strengths and the weaknesses of the protocol. I think maybe just reflecting a little bit more on some external pressure. So maybe let's start with a more positive aspect of it, which is the opportunities that this type of technology allows. So I think, Jerry, when we did the raise and then when we put out the press release, you mentioned that in Southeast Asia, 60 to 70% of people are either unbanked or unbankable. And so I guess this is one of the opportunities, but feel free, you guys, to now take us a little bit to the future and tell us what this could do for us.
Yeah, so maybe I could set a little bit of context for the Asia opportunity. So in the last year, it's actually been really exciting to see how, Asia really exploded in terms of crypto adoption. So, Axie Infinity, when it was really popular, actually brought millions of Filipinos of all classes into crypto. And some of them never had bank accounts in their life. So actually the first time they had a bank account was their MetaMask. And the first time they had some way of saving was actually staking, right? And so I think that's incredibly exciting because it's effectively this opportunity in places like Southeast Asia where there's more emerging markets to almost leapfrog past the traditional financial system because it just hasn't really served them over the past few centuries. And so if you think about some of the numbers for, in terms of the opportunity, there is almost like, I think $500 billion of a credit gap in Southeast Asia, meaning there's $500 billion of opportunities within small to medium businesses that are not getting funded. So I'll just give you an example, right? There are companies, for example, that are doing like solar projects in, let's say, Malaysia, right? But a traditional bank there may not necessarily know how to underwrite technology risk. And so it's very difficult to be able to get some financing to, put up some panels, right? Even though the revenue model and the way to underwrite it, maybe if you talk to a US-based investor or a Europe-based investor may really understand it. Now, all of a sudden, you have this open ecosystem in DeFi that can actually allow for matching of the risk appetite of LPs and investors and these higher yield opportunities that are backed by real businesses in Asia. So I think within the credit landscape, it's pretty exciting to be able to connect those pieces. The other one that I'll talk a bit about is actually cross-border payments or remittances. This has been, I think, one of the use cases that I just think is a no-brainer for crypto, right? For anybody who has ever sent money using traditional rails will know that Swift can be quite costly and expensive, take multiple days, and you don't have an Etherscan to check if your transaction doesn't go through. You have to call 2-3 banks, weird hours because they're in different countries just to figure out what happened to your transaction, right? Whereas stable coins is 100 times faster, 100 times cheaper, and there's complete transparency. So the space of cross-border payments in Asia is huge because you have a very migratory population that lives in different places. And so I think solving this piece could be, a really big opportunity there. So the reason why, we're building stable coins for Asia is we believe in this foundational layer of this medium exchange, right? Having Sing dollars represented on-chain, Philippine pesos represented on-chain. So we can actually help bring local stablecoin exposure, local currency exposure to protocols or to projects that want to tap into these opportunities, these multi-billion-dollar opportunities in emerging markets in Asia. So it's one thing that I think I'm pretty excited about, and pretty excited to actually just even over the last few days to meet projects and teams that are also building around this.
Good luck, Julien, topping up this.
Mic drop. That was a good one. I actually forgot the question now. The question was about the opportunities.
Yeah. So given the technology opportunity, we'll get to the cool part later, which are the threats. I know your favorite topic, but
no, it's good.
Let's discuss.
Well, Cherry got it right. Like the distribution for me, distribution of the stablecoin and being able to tap into markets that couldn't be possible before, but also the opportunity of building new type of ideas on top of the stablecoin, because you might want to, for example, in Asia or in Europe, to even if the US dollar is pretty strong, but might want to price certain products in US dollars, but also maybe in Asian currency, for example. And for European people, we have no way at the moment to either hedge ourselves, then it's just using US dollars and euro. And if you look at the market, the US has been playing quite well worldwide, on the worldwide economy. So if we could actually hedge ourselves or use external basket or index of stablecoins that are priced differently from the US dollars, we'll be able to get more sovereignty on the country or state level. So we could actually give on the nation state or the government or like the Central European Central Bank be able to extract or isolate themselves on the economy-wise, not worldwide economy, but more like being able to price product internally without being forced to use, for example, the US dollars. I think it's a huge opportunity for us Europeans. Yeah.
Very interesting. Fernando, Roman.
Yeah, I was just gonna add that for some people here it might seem crazy, but it happens that governments sometimes just seize people's money, and it's not that uncommon. It's not only a nice opportunity to hedge and to be exposed to another country's economy like the U.S., as Julien was saying, but also to protect your everything you worked for your generation, maybe many generations. You got like some heritage, and all of a sudden the government takes it all and never gives it back. So the fact that you can store like a passphrase or like tips or a passphrase and store like hundreds of thousands of dollars for families to avoid being stolen by their governments is, to me, amazing. And also like have that capital actually be efficient and be put to use in opportunities that they would not have in their countries. So it's really about inclusiveness and inclusion of people who would otherwise be vulnerable to that.
As a matter of fact, I think Cherry, as a team member, that actually experiencing firsthand those challenges, right?
I can share a bit of a story. So one of my co-founders, his name's Yemyat. He's actually Burmese, from Myanmar. And he actually had to escape the country during the coup last year in 2021 and came to Singapore. And he actually got into crypto because it was the only way that he could actually figure out how to move money out of the country, because effectively the military government took over and started like freezing accounts, made it impossible to withdraw. You had to line up at 3 a.m. to only be able to withdraw like 200 USD. So it actually caused this liquidity crisis like nationwide. And so him and a bunch of his friends actually got into crypto this way, got USDT, moved it out of the country, and had some way to preserve their wealth while the Myanmar chat, or the local currency, was actually like crashing in value. So I completely agree with what you said, in that sometimes, I was born in the U.S. and moved over to Asia a couple years ago, but I hear a lot of stories where like this idea that your central government or your central bank doesn't always have your best interest and does things that are completely out of your control it's a daily reality for some people, right? And so I think there is this like unprecedented opportunity really for crypto to go in and actually present an alternative financial system effectively for them.
Yeah, very interesting. Roman.
Yeah, just one thing I would like to add. So the way we like to also think about the opportunity here is a bit from an innovation perspective. I think one of the innovations you can do with stablecoins on money is like the censorship resistance stuff, right? And that's super exciting. I totally agree. And I think there are many, many more things that you could do that are really like innovating on money. And I think that's, to me, like the biggest opportunity here, right? Like you basically have something that everybody uses that's just known for ages and has basically not changed in ages, right? Money. And now all of a sudden, I think especially with stablecoins, you can imagine all kinds of ways of how the this thing that we all use now all of a sudden changes. Maybe it's more censorship resistant. Maybe it allows for different ways of conducting monetary policy, right? By directly influencing what happens on chain with this currency. And I think that's a super exciting opportunity to innovate on this.
Yeah, even overstepping some steps on how you get help to directly to people. Yeah, very, very interesting. So moving from the opportunity to Julian's probably favorite topic, which is the threats. So you were telling me the other day, for example, the way like regulators used stablecoins as sort of like a Trojan horse when it came to the Tornado Cash thing. So tell us a little bit more about it, and guys, feel free to interrupt and bring other cases.
Yeah, I mean it's interesting how we consider the concept of stablecoin as, for example, I was in a panel it was a couple of days ago, and listening, or the feeling I got by listening the panel, it was like stablecoin can cure any disease. Like basically, is the solution.
It's the
for
new
everything.
aloe vera.
Yeah, exactly. It's like you have a problem, use stablecoin. You have something, use stablecoin. That's where we are at the moment. I think it depends how we. I mean, any kind of innovative technology or type of evolution also has its own basket of risk. And what we've seen so far in the industry, for example, like you mentioned it, one of the major project, MakerDAO, and I was also involved in the very early days of MakerDAO. There was this concept of fully decentralized stablecoin and completely backed by something that is not fiat, making the stablecoin very decentralized. And this concept of finding a way to have something stable that is not actually directly priced by a centralized authority, because if your stablecoin at the end is centralized, I mean backed by fiat money, then at the end is kind of like centralized. So then what happened is, like, in order for them to get liquidity and up in TVL, then they start getting they were chasing liquidity, and liquidity was from centralized stablecoin. So USDC, or Maker before was just ETH, and they went into USDC and all type of things. So made MakerDAO something a little bit centralized, and now this is all the different stories that we have on the MakerDAO world. Then you add, so there was the nascence of those huge opportunities in the market using coins such as USDC, USDT, issued by centralized authority, because they can mint whatever they want according to the balance sheet that is kind of stored in a black box. So then the world was like, the DeFi space was using those type of products. For example, Tornado Cash, where normally the vision of decentralization is to be able to distribute value and communicate between each other, like freely between without middleman. That's the value of it, like decentralization and transparency, and privacy. Most important aspect of decentralization is privacy. So Tornado Cash, how many people know about Tornado Cash here in the room? Yeah. So Tornado Cash, they got this concept, they call it mixer. Mixer has got a bad connotation because it's for obfuscating a transaction and sending transaction between people. So people were using this tool, this decentralized tool, as a way to send money between entities or between people without being tracked on a blockchain. And it respects the goal of the vision of decentralization, of privacy. So people believed that they were safe doing so. But what happened is then there was a subpony on the Tornado Cash, like something happened in Tornado Cash. They were suspected to do something. So they wanted to shut down some Tornado Cash. So they arrested the team. But obviously you cannot stop project that is decentralized. Or you have to stop the blockchain. So Tornado Cash smart contract cannot be stopped. So then they come up with this idea about, what if, instead of stopping the contract that cannot be stopped, or stopping the chain of Ethereum that cannot be stopped, we stop all the addresses that have interacted, not the addresses, but the assets that are centralized on the wallets of users that interact with Tornado Cash. So suddenly, if you play with Tornado Cash in the early days or whatever, or just use Tornado Cash to create a new address, because normally when you create a new project, you want to create you all end up in this situation where you want to create a new contract, but you have to found the contract. So you use a centralized exchange to fund the contract. Well, here people were using Tornado Cash to just create new addresses. So what happened is like then USDC, the centralized authority, they shut down and they flag all the people that interacted with Tornado Cash on the wallet base. So your funds in your wallet, if you add USDC, doesn't matter the amount of USDC you add on the wallet, you cannot use those funds. So what happened is like by us saying stablecoin are the best solution and whatever, any solution that then in the back use centralized stablecoin, then at the end, if they can be shut down, then also bring risk on the entire DeFi, because if you have a protocol that you're using, lending protocol, for example, that is over collateralized with those stablecoin, if within 24 hours, if you can stop those collateralization, then it makes the entire protocol obsolete. And that's what happens. So that's why I said the Trojan horse is now we saying, please use stablecoin, in your wallet and interact with DeFi. But at the end of the day, it's also very dangerous because they can stop the usage of the stablecoin.
Jenny?
I completely agree with what you said. And I think the trickiness of this is actually to figure out how you actually can maybe manage the spectrum of how censorship resistant and decentralized you really are, right? Because it is actually, it's not a binary, right? You're like completely censorship resistant or you're not, right? I think it might be the amount of collateral exposure that you have to like a centralized stablecoin like USDC, etc. Now, one of the questions I keep asking myself is what exactly is the right I guess degree, right? Depending on what you're trying to achieve, number one. But then number two is if we do go down the route of, something that is completely censorship resistant, doesn't reflect something that mirrors something in the real world, like a currency, right? Maybe it's an inflation index, or it's something that, something similar to maybe a RAI, for those who aren't familiar. It's a stable coin that's not pegged to like US dollar or any real world currency. How do you build relevance in the end user's mind as a medium of exchange, right? So people actually think of it as a something that they use to transact, borrow, lend against, things like that. And so the threat is definitely there. There is a maybe degree of exposure that you have to that threat that you have to just know. But then the question I ask myself, which I quite honestly don't have an answer to, maybe I can get some thoughts from other folks here, is how do you actually build relevance for something that is maybe completely not tied to anything in the real world in that sense, and hence 100% maybe decentralized in that sense.
In your particular case, and as a issuer of Blue, what keeps you awake at night?
Well, I think, I will turn the conversation maybe to a slightly different direction because, right now, I think the thing that is most important is for any newer stablecoin project is cracking what I call the liquidity and the demand flywheel. Meaning, how do you capture liquidity for the stablecoin that will be needed to back it? Because we're not backed stablecoin, we're using crypto collateral. How do you get enough liquidity so it could be exchanged efficiently in indexes? But then how do you then also drive demand for the use cases, right? And those go in tandem, right? I think when you don't have enough liquidity, you can't support large trades. Therefore, you can't support certain commercial use cases, things like that. So what keeps me up at night is actually more of the user adoption question, right? Like how do you actually crack this cold start problem with new stable coins? Because you don't have liquidity day one, but how do you kind of bring that live, right?
If you need help with the flywheels, maybe you can call Sam at FTX. He knows how to do this. No, I'm joking, Sam. Okay. Fernando?
You can come to Balancer or Curve, and we'll get your problem solved. Yeah.
Thank you.
Well, I would say like any stablecoins are like there are numerous of them already. Like it's not something that you're creating like the first like one like DAI. So you gotta make sure it has something different, some like USB that only your stablecoin has or your stablecoins have. Otherwise, it's really hard. You can throw incentives, you can do lots of stuff, but at the end, like if you're not adding value, like something new to the market, it probably has a low chance of success. Yeah, which I know you guys have differentiation. So yeah.
Yeah. Also, given that we are facing the same problems, obviously that you're facing, end user adoption. I totally, spend countless hours on this flywheel that you described, right? And in the end, I think it comes down a lot to there being really tough real-world problems to adoption that people are just not focusing enough on. And actually, that feels like the biggest threat, actually, to me, to the whole stablecoin space, because I feel like if projects keep on focusing too much on incentivizing demand, for example, within DeFi, right? That's great, but that will not kind of solve the problem itself, right? People will just kind of shift their money where they get the largest incentives, right? And these structures are needed. But in the end, what I think the space should also really focus a lot of time and effort and resources on is to solve things like on and off ramp, right? Like if people cannot on and off ramp at acceptable fees in like all countries in the world, then it's just really hard to get people interested in actually using those stablecoins, right? And I think stablecoins are around for a while now. It's just still the case that not many are using them in the real world, right? So we need to really double down on getting on and off ramps solved, regulatory things solved, get payment processors to be comfortable really accepting these currencies and stuff. Yeah.
So if I can add something, like for example, on our side, because we are located in Europe, we are really focused on investing in stablecoin that are not US dollars. It's not because we don't like US dollars, but we believe, it's because we're in a straight category. For example, like how many people have stablecoin US dollars in their wallet, like, or using it? And how many people have a euro stablecoin? Yeah, almost like just a couple of people, but US dollars is across the entire room. My point is, right now, I would like to see the statistics, but from people that are using DeFi in the entire world, they're probably like 98 or 99% of all the people that have US dollars. So this is a massive threat for other countries that are not American based. And this is a chance for Europe and Asia and other countries that they can issue their own policy without being threatened by another entity. And that's the reason why we have to work together to build Euro. For example, in project in Europe, Angle stablecoin that is using like futures mechanism to balance the peg. This is fantastic, like fully algorithmic stablecoin. So if we can build a pool, Blue stablecoin, Angle stablecoin, all type of different stablecoin and bring liquidity, then people will be able to use them because you will have a way to make sure that you can exit your position, you can hedge, and you can also leverage that type of basket because you believe it's actually safe and it's a good hedge against the biggest one that is already distributed. So yeah, the threat is there and it's happening, already happened. Again, you guys are winning the race. I don't know how this happened, but this is the thing. So yeah, it's a chance for the rest of the world that they can actually apply their own policy. That'd be great to see.
Very good. And a couple of you already mentioned the CBDCs. Just threat, opportunity, neither.
I think it's not really crypto. You know, it's just another way to impose centralized bullshit on people. And I'm maybe too much of a libertarian, but I don't think they might try. But yeah, I don't think it's gonna be the next generation of finances. It won't be like central banks that will be defining that. Yeah.
Perfect segue.
If you want to add something?
I was just going to say really quickly, it also depends on the country as well. I think in certain parts of the world, I really think it's going to be impossible for CBDCs to completely take over. I just don't think, for example, in a country like the US, people really want their government to be able to track all their payments, right? So I think a retail level just really wouldn't happen to that extent. I think in countries like Singapore, where I'm currently based, there's some interesting innovation going on the CBDC level. There's something called Project Orchid. They're doing like, I guess, CBDCs for wholesale and cross-border transfers, but they're sticking at that layer, right? They're basically like, there's a bunch of stuff that happens at the user level, retail level that, you know, we recognize there are private players that are better than us at it, right? So to me, that's a place where it's maybe complementary to have CBDCs and more crypto stable coins and private stable coins. But in other countries in the world, I really don't think they're going to make it as maybe a massively adopted tech.
Actually, I think it's actually a great opportunity for governments and nation state to rethink the way they distribute money, because we believe that governments and nations are against the people, but actually it's not the case. They are elected to serve the people on the ground, but the problem, you have those people like lobbying that intervene and then direct what the central bank or the government should do. I don't have battery now. Okay, yeah, it's much better. So the point is, I think it's a great opportunity if they do it right. They could, because normally people believe that the commercial bank are big friend with the central bank, but they are actually big enemies, because the commercial bank are the one that can communicate with the people on the ground, and the central bank is the one that normally should serve the people without necessarily making money. But for them to communicate with the people on the ground, they have to use commercial bank. So then they issue money at a certain price, discount price, and then they distribute the money back to the people. So the commercial bank is making money on our back and using central bank to have access to money, central bank and governments. But if there are a way for them to directly communicate and offer services back to the people using commercial bank, then it will be a massive. It will be up to people that can build services directly for the people on the ground. But I don't think it will be possible, very unlikely, because commercial bank and lobbying will try to first stop these initiatives, and then if possible build this layer of like censorship to be able to make money. But normally it should be like a massive opportunity for governments and regulation and central bank to be able to use those products and serve the people. So for me, I think as a community and DeFi builders, we should work with those guys, telling them, listen, this is a great opportunity for you to regain power to serve the people for the reason you were elected to.
This is the perfect. Can you hear me? Yeah. So this is the perfect segue for the next part. Just before we move to the question and answers, so we are going to play a game called If I Was. And so I will start with Julien, since you brought up the topic. So now I would like.
I'm the only one that don't know the role, right?
Yeah, you are the only one. Yeah. So now the challenge is, so if you were to put yourself in the shoes of this person, what would you do? So what would you do if you were Christine Lagarde?
You give the name just me, or?
It's just you, and then they have others.
Okay. Well, first I will quit. And that's what my first. I mean, seriously. Hello, Christian, if you hear me. No, I mean the thing is, like, if you, I mean, pretty savage. If you are in the shoes of someone that is managing one of the biggest company in the world, I mean, she did a fantastic job. I mean, the economy was booming when she was directress of the when I was directress of the director of the FMI at the how do you call it in English, the FMI IMF, yeah, the IMF. My job, I did quite a good job. But now, like, as the director of the central bank, I mean, you look at my performance. They been decreasing. I'm not able to. I mean, like it's not even decreasing. It's like you look at the cliff, you know. So I'm just increasing the inflation because this is the only tool I have access to. I'm following what the US is telling me what to do. I'm printing money because I don't want to be left out. Because the US they print out 3 or 4 trillions. I kept track of the impression machine of the printing machine. So yeah, I'm stuck. I don't know what to do because my education, I was formed in this elite of people that only think one way, and I don't want to listen to the new generation of people that are building new type of technology because I believe they don't know what they're talking about since they are joining the space. So obviously they don't understand. I don't trust in stablecoin because this is type of thing that don't make sense in decentralization and all this stuff. We have a way of printing money. I have tools that I learned at school, and also I'm listening to people that are a group of young 80 years old people that I can trust. So yeah, that's my. I think I would like to quit, but I'm stuck in this job. That if I leave, there is nothing above. Maybe become a president of France, but it will be very difficult.
But then there's a intern or somebody with maybe 60 years old that comes to you and says, "There's this new thing called the stable coins, and maybe we could do this centralized thing." What would you do, Christine?
Yeah, I think interesting. If you're telling me that I can make more money. No, but is this 60 years old guy part of my team or just outside? Because if he's not part of my team, I'm not necessarily listening.
No, it's part of your team. Okay.
Ah, it's part of my team. Yeah, so I will analyze the situation. I will try to understand the concepts, but then I will need to ask people that understand what the guy is saying because I'm not necessarily the best person to understand stablecoin. So then I will ask those guys, but then those guys they will see the position at risk because they welcome this guy about the subject that they don't understand. Then me, Christine Lagarde, I will need to fire those guys. So then they will tell me that this is not a good solution. So then I'll be stuck in the normal process of doing things that we all done for the past centuries.
Thank you, Christine. So this is the European perspective. So maybe Fernando, if you were Jerome Powell, what would you do?
I do think the Fed and Powell, I think they have a very hard task at hand.
You taking the accent of Powell?
Yes.
Meeting.
I'm not such a good actor like you, so yes, I think they have a very hard task. Like the whole world economy depends on the dollar. Everything they do affects not only the US but the whole world. And as you said, Julien, a lot of people just follow.
Christine.
Yeah, Christine. A lot of people just follow what they do. So what I do. I think inflation is what is the worst for the people. So it has to be fought against. It has to be kind of put down. We're like consistently eight something in the US. Here probably 10%. There's 2 levers to do to like fight inflation. The like the rates, interest rates.
In the UK, they are 18%.
18.
I think so. Like
in the UK.
12 or 18 or 16 or something. Yeah, they're going in the right direction.
Just crashed, right? Right. Yeah. You're not asking anyone to be Liz Truss or whatever. Right?
No.
Yeah. Okay.
We are done with central banks after you two.
Yeah. Okay. So yeah, I think yeah, and the balance sheet, like the Fed has, I think 9 trillion on their balance sheet, and they're like doing quantitative tightening, so they're getting rid of those. So yeah, they're just making sure that people are not investing in stocks and bubbles and just buying bonds, which are boring, but like giving now 4-5% in the long term. So why risk? And that's just the way you can help people by not like making them lose 10% of their wealth in a year. So I wouldn't change much. I think the only thing I would be careful about is when to start changing the trend. People will complain either way. Some people will say like you're being too soft and you're decreasing rates too soon. People will say it's too late. I think a recession is probably inevitable for 2023, and I hope, like from my crypto side, I think crypto will be, again, will have a chance to be a hedge to the recession. So yeah, I think Jerome Powell is just doing like honest work and like caring about the people, mostly of the U.S., which sucks. Like they should care about people in general. But well, they bombed hundreds of thousands of innocent people in Japan. Yeah. Anyway, that's another topic. I'm kind of very
Very
mad at that.
Yes, understood, understandable. And Cherry, look, let's say like for example, you would be Jane Fraser, the CEO of Citibank, and now this guy from your innovation team comes and says, I went to a conference and there's this thing called stable coins. We are a big bank. What do we do?
Well, if I were Jane, I would have a couple of initiatives that I would outwardly be very supportive of. I probably wouldn't call it stable coins or crypto. I call it digital assets because I think that's what the institutional guys call it. If it's helpful in serving private clients, right, or existing clientele, or helping me serve my mandate, right, I think that would be a proposal that I would support from the innovation team. Now, on stablecoins themselves, if it's a way for us as Citigroup, right, to gain maybe a competitive advantage in our own kind of intra-bank settlements and make it cheaper than JPM, we'll integrate it there. And then I think another area we could explore will be maybe instant payments, right? Like making, things, when you send money to and from peer-to-peer, it's done instantly without having that like a couple day settlement.
And how much is your commission?
As Jane or as Sherry speaking about
this? No, you are not
this?
Sherry anymore. You are Jane now. No, I'm joking. Because this is a joke.
Okay. But probably in the context of stablecoins, what I will be pushing for as Jane is all the centralized stablecoin models, right? Like in my mind, I guess the stable coins that should be used for payments are going to be the ones that are like more like Circle, fiat backed, or created by banks, and that's what stable coins are, and everything else is a digital payment token, right? So even on the outside, I think I'll be thinking about how crypto serves perhaps my goal as an institutional bank, but I'm not thinking necessarily about maybe crypto overall as a maybe for like maybe people in general, right? It's more around how does that fit into the yeah.
Very good. And maybe to finish, like the most exotic of this. So say you are Mark Zuckerberg, you tried with Libra, it didn't work. Now you have your pet project, but you look at stablecoins. You try to do something, or how do you?
First of all, I think it's much harder to stay in character with Mark Zuckerberg, given that he's not a real human, as we all know, right?
Too much expression.
Yeah, so I need to kind of find a different face. Yeah, first of all, if somebody mentioned stablecoins to me, I probably would start to cry thinking about like all the questioning that I had to endure by the U.S. Congress, for the Libra thing. And probably also more in the team a bit. I think like part of the Libra team was really top notch, and it's kind of also a bit of a shame that like all this went down the drain in a sense. I guess Mark, I think I would at this point stop building very expensive video games. Right? Like I think
was going to ask if you had to choose.
Yeah.
the metaverse or the stablecoin.
I mean, given that they have spent, I don't know, like 20 billion already on the metaverse, and nobody seems to like that game.
Where is Libra?
Libra is gone.
Oh,
yeah. So they tried, but yeah, I would definitely.
You tried.
I tried. Well, yeah, I guess I tried. Yeah, especially during the hearings in Congress. But yeah, I will definitely stop building that that metaverse, video game. Try to. I think I would go fully into Web3. I think it's time to realize that people are less and less okay with having their kind of proprietary data being sold. And I think they're like, to get one step ahead of that, I think it would be nice to take Meta and Facebook, Instagram fully Web3, make sure that people own their proprietary data themselves, and maybe, establish a business model that doesn't rely on selling that data, but just kind of providing the platform for people to sell their own data in a sense, right? And then take part of a fee on that. That would feel very good to me if I were a human.
And if you're a good guy.
We are making too many enemies. Sam, Christine, Mark. We have to be careful because
They are friends. They are friends.
Yes.
It's just recorded.
It's mainstream.
Well, and I also definitely would use Mento stablecoins in all my platforms. So just wanted to get that out there as well.
Thank you very much, guys. So I think we can open the floor for some questions. Keep in mind that good questions get merged. So we are.
But not all questions get merged.
No, exactly. Just the good ones. So any questions? Yes, sir.
So
He came prepared.
test, yeah. Test. They're working or? It is green, but loud enough. Okay. So I think we can all agree that currencies in general are an important tool for power and control for all governments in human society. We also see that in the regulation, especially the MiCA bill. I think US and Europe are very clear that they don't want algorithmic stablecoins. I think they will easily say it's because of USDT, we got to protect the people, but underlying, that it undermines the power of the currencies that they have. You can see it as bad, you can see it as good, because I understand that you want to influence the economy in a positive way, so you need control of the currency. I understand, and that's the only reason why I would possibly see a benefit in the central bank digital currencies, because it will give you more, like you said, levers to fine-tune whatever is happening, rather than now having such a crude tool available. But from the crypto space perspective, I would say, isn't it more important than to altogether focus on algorithmic stablecoins, because those are the only ones that give you the complete freedom. And I like what DAI did, but back in 2020, they needed USDC, which was a fiat-backed stablecoin, to get it back to peg. I could see DAI work if the crypto space is much bigger and much more stable, just as we saw the stock market grow. And then I can see it work. But until then, I would say we need the algorithmic stablecoins to get that complete freedom. So in that sense, wouldn't it be better for the industry to focus on a whole bunch of different types of algorithmic stablecoins so they can form a basket, so if one fails, that it doesn't crash the whole market or has such a bad influence as we've seen with USDT?
It's a simple question, but I think you make it super long to get a merch, and it makes a very good question. Yeah, it's a good question. It's a great question, and that's what we've been trying to do as a DeFi space. I think building a fully algorithmic stablecoin requires some very good understanding first of traditional finance and what happened in the past historically, plus the implementation of different types of derivatives like options, futures, and all type of things. So before getting to that stage of being able to implement a fully algorithmic stablecoin, we had to build the pillars of lending market, being able to issue options with liquidity of options, being able to have a network that by issuing or taking a leverage such as futures, you don't need to pay $1,000 for one transaction. So then there's no point of using and taking a future if you're spending more into the gas cost of the transaction. So all those type of things that now we are not yet solved with scalability of, for example, the chain of Ethereum, then with optimistic, with different L2 solutions and being able to send transaction cheaper and also faster, we're now in a place where we can build this type of stablecoin. and I don't think before it was possible. For example, Angle, they tried, and they still it's one of the, for me, one my favorite project. But the fact that they were using futures
after BlueJay.
yeah, after BlueJay, obviously. But then it was super expensive to use the mechanism that they had in place to counterbalance the peg, making sure they're stable. So yeah, they're working on it. But now with the new type of technology that's arrived recently, with the layer 2 solution being able to use, then now it's possible. So we'll see, I think, next year, new type of stablecoins, algorithmic stablecoin, and pool of algorithmic stablecoin like index and those type of things that make it possible for something that is censorship resistant. Yeah, so the question is, do you think that then someone will create a ton of the cash to support to use the stable algorithmic stablecoin?
If they're gonna censor it like through OFAC or
Well, it's difficult if you, if for example you have a fully algorithmic stablecoin that is based on ETH, you will need to stop Ethereum, right? The blockchain. But if you have a mutual interest of using, and that's the reason why we have to work with those guys, like institutions and nation state or central bank, to use the protocol, because then they are incentivized to keep the protocol running because it's making them more money, or they have incentive to keep it running. For example, I think JP Morgan did recently, even if they call it Bitcoin and blockchain a scam and a fraud and the dumbest idea that the world has ever created. They recently announced that they did transfer of money using Ethereum. So yeah, it says it's if we make them use the blockchain, then they will have less incentive to shut it down. And if we build algorithmic stablecoin that have fully decentralized, and then they will not shut it down. I mean, Ethereum blockchain is pretty big.
I would just add that I expect to see a lot of experimentation, and I think we should encourage that. And like this industry moves 10 times, 100 times faster than anything else. Maybe some exceptions, but so I wouldn't say we should exclude the idea of under collateralized. When you say algorithmic, I think there's always like this question which I asked Julien: is it under collateralized or over collateralized? I think algorithmic is it's important, so there's no censorship. But being under collateralized means you have to have trust coming from somewhere else. Like the dollar is not collateralized. Like in 70 they just stopped giving 30 ounces or whatever gold for $1 because it was not possible to grow. The same problem of getting more traction and scalability. So current coins, like current fiat, is not collateralized. So I expect a lot of experimentation to happen, and a lot of things will crash, and you have to be very careful what you choose. So, but I think it's the path of separating money from the state. We separated religion from the state like 200 years ago or more. It's about time we did that for money too, and I'm sure like this is gonna happen this century. It will take some time, some decades, but it's time. Like it makes no sense for the government to control money.
Maybe to add to, well, it's getting really loud all of a sudden. To add, no, no, I popped out of the character just in time. To get to back to your question on the stability characteristics, right? That happen if you combine different algorithmic stablecoins in such a pool, right? I think the 2008 financial crisis is kind of a warning, a warnings, or has some warnings for us in that direction, right? I think it can help with stability, right? Because of course there are other stablecoins that can kind of cushion the risk in a sense and absorb it to a certain extent. But also I think if you overdo these things and repackage risks, right, at some point nobody really understands the risk structure anymore, and risks become very systemic. So it can also lead to a case where then you can have kind of an avalanche type of effect, right? Some stablecoin running into problems and like, you know, this risk as actually being systemic without people realizing, and then a lot of stablecoins running into problems at the same time. I think like there are both sides to it, right? It can be a nice hedge, but it can also lead to a situation where risks are just not understandable anymore, and actually this whole system is destabilized. I think that's the trade-off to choose to figure out here. Yes, I think it depends on the exact setup, right? Like whether you do it good or bad. You know, like you shouldn't do the subprime thing, right? And repackage these risks until nobody understands them anymore. But if you do it well, it can help the system, and it's more like an insurance than it is like selling junk repackaged.
And also, it's important that we realize that as a young community or builders, that we don't necessarily understand everything, and we don't know what we don't know, and things have been built in such a way that people have huge experience of the worldwide economy, macro politics, and stability worldwide. So we're not actually suggesting that what we're doing is the best solution ever. What we're saying is like it will help. We believe we can use those different tools and type of things that we're building to solve problems worldwide. But obviously, we're not saying that whatever we're building is going to solve like geographically, like a macroeconomy and politics, because it's a complex world. So we cannot say, and it would be pretty arrogant to say that whatever we're building is the solution to all the problems in this world that governments and people with huge experience have been making for decades. But I believe as the technology that we're building is so strong that we can resync the model, that the monetary policy and all the different type of things that have failed for centuries, use those type of things to create new opportunities and new solutions for people to build and make society a better place.
Yeah, I almost think of the impact that we have as an industry is actually beyond just crypto itself. Actually, a lot of the, I almost say it's like a R&D lab at a scale of the globe, right? With everyone here, a lot of these things are actually ideas being adopted by players outside of crypto and being inspired by that. And so even though like, you know, maybe we might not be the solution for everything, but the things that we're experimenting with could eventually lead to better and better, for example, monetary policy, right? You know, one thing I really admire about some models is actually I'll just maybe talk about one, is the AMO model for FRAX, right? Algo market operations. If you think about that, it's as if you were to AIify like the Fed, right? Like instead of having like hundreds of analysts like run through numbers, have these meetings, decide on what the rates are, do it like, you know, at a set cascade. It's done automatically, right? And those are things that institutions are recognizing as technologically almost better in some ways, even though it's still an earlier stage. So I think sometimes we can take a step back and just see that a lot of the work that we're doing, a lot of things that we're experimenting with actually has applicability that can actually move forward a lot of different spaces outside of crypto as well.
Thank you very much. Very, very good. Any more questions? Yeah, we have some in the back. Oh.
So my question is like, Shari was mentioning that one of the strengths of stable coins is to provide like credit to small businesses, right? So my question is, how would we be able to link smart contract credit with like off-chain businesses and like, let's say, assessing the risk of a project or whatever?
Yeah, so that's actually already happening. Okay, we're just gonna. It's okay. I have a pretty loud voice, so I think
This one is better.
it does. Hello. Yeah. Okay, we're good.
Running short on battery and money.
Yeah. So the execution of this, I think, actually does come in a couple of layers, right? So I think one thing that we, when it comes to at least the credit space, right? There is a part of it that can be permissionless, right? That the stable coins that are being created, that are in the pools for lending, but you still have to have some kind of off-chain operation that's doing the credit analysis, right? Taking a look at this business and seeing, based on the revenue projections that they have, I believe that they can actually properly return this interest rate plus amortization over this time period. You do proper KYC, where if somebody says that they have this factory in this land, you go and have somebody go and see if they actually own that asset, right? And that is, you know, currently for these SME kind of lending opportunities still in the more permissioned world. So just to call some examples, right? This is kind of how Goldfinch does it. So Goldfinch is a crypto lending platform that's doing uncollateralized loans for SMEs in emerging markets like Nigeria, Philippines, etc. And they actually work with local credit funds that are doing this process, right? Doing the credit underwriting and all of that. Goldfinch themselves, I don't think, have the license necessarily in every single country to go do that, but then they're depending on that layer being executed by a partner that they're working with. So I think for some of this, right, there's a value chain of how this all works. There's an off-chain component that is just not built out infrastructure-wise on-chain yet. That's being handled by a third party. But then the pools, the stable coins, and I guess the part that's on-chain could actually have a permissionless component to it.
And what's actually wow, it's always a surprise if you start talking. What's actually super interesting, I think, about Goldfinch and related protocols is that they allow to really innovate on the incentive structure here, right? Like all of a sudden there's a way to incentivize people on the ground to actually vet like tiny businesses and kind of provide capital to the right people, right? That should get the capital, that really have like a business idea that makes sense, right? And finding a good structure here, I think, is super important. And I think there are a lot of opportunities here coming from this decentralized nature of things and like the new incentives that you can set in such a system.
Hello. I will have two questions. The first one will be kind of easy, but so right now we have Aave, which is creating their own token, their own stablecoin, which is Go, and we have Curve working on another stablecoin. But then when we compare the trading and the usage of DAI, for example, comparing to USDC and USDT, we see that the decentralized stablecoins already have a lesser usage than the centralized ones, and by creating these new stablecoins, this decentralized one, aren't we just trying to even more fracture the liquidity that we have and create even more instability that could get into that space already? So this was the first one. I'll keep the second one for after that.
This is working.
This is very low. Be careful.
That's it. Very smart. It's a good again, good question. You are on a leaderboard for the merge among two questions. Well, the thing is, like, what we're trying to do is trying to build a decentralized stablecoin. The problem is at which level are we getting the centralized stablecoin into the pipeline of collateralization inside those different protocols. What we could do, and this is something that we're working on as well, is an index or LP token that will represent those different decentralized algorithmic stablecoin, and then it will be sufficient amount of liquidity in one pool, and then the stable, like the index or the LP token, will be super stable, like something that we initiate back in the days with the TWI pool, so a basket of USDC, USDT, and DAI, but USDC and USDT they centralized. We could do the same with only decentralized algorithmic stablecoin, and then depending on the region in the world you are sitting, then you can redeem, withdraw the stablecoin in your local bank, or pay this stablecoin certain area of developing countries, for example, and then you will have an arbitrage opportunity. So it's really good I think the idea about having local stablecoin or like major stablecoin was initiated by like in very old days for OGs in the room, but a guy from Banker Protocol, he had a project that was that had local stablecoins. I mean, local crypto, local coins, and then created a Banker Protocol. Some people could say this was way before. It was actually before Uniswap, and Aiden took the idea from Banker and built Uniswap. But yeah, it's a good question. What we're trying to do is like trying to provide and provide a technology to people that is to the ethos of the vision of the space, decentralization. And if we have major DeFi protocols such as Aave and Curve, and also like BlueJay and then Celo with Mento protocol that are creating different form of stablecoin, hopefully they are sufficiently decentralized and algorithmically based, then it will be a perfect world, because we can protect ourselves depending on the situation. The issue at the moment is the risk is sitting on the fact that, as you said, the liquidity is sitting in centralized authority. We need to decentralize the stablecoin. We need to use less USDC, less USDT, or if we don't want to use less, we need to grow the usage on the TVL size, because we can keep the size of the stablecoin there. But at the moment, what they do, and they're very smart, they pay interest for people to deposit inside the centralized authority to mint the stablecoin and then access DeFi. So it's an entire supply chain of what happened with those funds and Three Arrow Capital and Celsius and all different guys. They're using the machine to get access to liquidity, borrow capital against speculation asset, and then continue. And this is how we got the subprime crisis in 2009, right? In the borrowing market, in a house market. Yeah.
I can go for the second one then. Okay,
Go for it. But you can only get one merch.
no, it's I already have a cap, so I'm good. I can just give it away to someone here. The second question would have a link with Tornado Cash and what happened this year. So Tornado Cash got its front end, which was blocked for American users, and we've had lots of hacks. And thanks to Rect, we can understand them. And so these hacks, we have seen that at first the funds went through Tornado Cash, but then we've seen that some hackers actually deposited this stablecoins or whatever they had into Curve, for example. So they could get an LP token which cannot be censored. So, and then we had SBF who offered also kind of regulation where you would, if you're a normal user, you would not be able to interact with the UI of a Curve, for example, or Aave or whatever. And so, do you think if the regulation goes on and we have more and more use cases of hacks going through Curve or through other decentralized protocols, we could actually see the UI, the front end, blocked for users by governments, and therefore we'll only have centralized entities trading on these UIs, or people who can actually interact directly with the smart contract?
So I think the front end side definitely is an important piece in the whole decentralization, game. If you have one front end that regular end users can use, it's a clear, central point of failure, right? So that's something to be removed. I think if you are trying to build a fully decentralized product which is censorship resistant, you also need to make sure that, for example, you allow people to easily spin up their own UI. Right, I think that's something interesting to explore, to provide basically like an SDK or like a Docker image or whatever, so everybody can start a web server that provides a UI like that, and then maybe have some form of verification on that page that people can check, so that this is actually interacting with the original smart contract. So I think there are a lot of things there you can do to mitigate that problem. It definitely will still be a bit of a struggle with regulatory institutions over the next few years, right? I think oftentimes intentions are good, also on the regulatory side. I think that's something people in crypto often, including me, often kind of forget. But often it's about protecting folks, but then of course things go too far pretty often from probably all our perspectives. But I think finding reasonable solutions together with these regulatory institutions is just a task that we have to commit to also as an industry, and probably by sending tornado cash funds to some of the addresses of, I don't know, Bill Gates and the SEC themselves and whatever. It was one way of showing them that probably like what they tried to do wasn't kind of the best solution of all of them. I guess these kinds of backs and forwards, forth and backs, I guess, will help to find good remedies in the future for these things.
I think it's a good point, and also what Fernando mentioned. I think it's a broader a vision, broader problem. It's as a community what we're trying to achieve, what we're trying to build, and you have concept of monetary policy that worldwide economy could completely change on the ground, because if you are able to issue tokens worldwide and stablecoin worldwide, it will completely change the game. So stability wise, it's also a good question. Is it going to be more stable by if people cannot censor other nations and country, like that's what's happening currently? If you're telling a country you cannot trade, you cannot use this stable the fiat US dollars because you are not part of the whitelist. But then if a stable coin, then they can put themselves aside of those sanctions, and this is really really dangerous. So I think we'll need to rethink how we want this society to evolve in the coming decades or centuries. Do we want to be able to send transaction privately? Is it the future of what we're trying to build a society? Because if this is the case, then regulations and authorities and companies will need to find a way to stop the bad guys. But at the end, if the technology that we're building is providing more value to society, this is something that we should unleash and we should push forwards, because we need to guarantee and we need to prove to people that this technology will bring more value. It's the same as saying nuclear fusion or fission. Yes, you can do bad things, but actually on the stability worldwide, proven that is also being used in a way of stabilizing the economy, the stability macro level, but also everyone in this world that is using electricity and type of things should actually use nuclear because it's safer, it's cleaner, rather than actually doing those type of digging resources from the ground. But yeah, you have it's like the same. I usually use this example. It's pretty bad, but it's like the same as using a knife. We all use a knife to eat, but some people might use the knife to do something bad. So it's about regulations, entities, and stuff like to stop them doing those things. But for us as a community, if we use those tools, this vision that we're trying to accomplish in a way to help society, and then there's no doubt that we should push for that. And then the question about blocking the UI and because the people are doing bad transaction, at the end, it's not our job. Our job is to provide services that help people. And then you have job from people that they need to stop people from doing bad things.
Thank you.
Hello, hello. Since I'm betting for one of these caps in the table, I'm gonna try to tell a story before, but I want to do like 2 technical questions for Roman. The story goes, I'm trying to summarize it. It's funny that growing in Brazil like in the 90s, it's a forgetting story that most of us, I grew up with like the stories of my grandfather losing everything from the crazy economists that you had, like with the confiscation, that suddenly everybody who had savings had all their money lost like overnight. It's an interesting story for most of us with arriving at our 40s. And then story goes fast. I'm married to a Venezuelan, so we are kind of aware of the crazy things that are going on in Venezuela. And then I kind of taught her brother to deal with crypto, to kind of take his money out of the Venezuelan pesos, the bolivares, and the guy put everything on Luna. So I'm trying to. Things got fucked anyhow.
Now I'm worried that you are in Portugal. Now I'm worried that you are in Portugal. You born in Brazil, you lost that.
Yeah. That's why things are spread around in different currencies today. But getting to the two technical questions for Roman is that I actually got a grant from the Celo Foundation to work on on-ramp for the Brazilian, let's call it Brazilian stable. People usually don't remember this kind of real or how to pronunciate it. And it's massive challenge working on on-ramp. And then I got into the Mento white paper, which seems beautiful. You know, I have to decode all the Brownian motions and the retractions. And it seems like a complete solution for like an algorithmic stable economics, let's call it. But then on the practice, it was a kind of a bigger challenge. You know, once I'm using, let's say I'm on the terminal, I'm going to mint some Celo, some Brazilian stables, and have like a massive slippage. Like if I want to convert like 10,000 Brazilian Celos, I would lose like, I don't know, 15% on slippage. And then I would have to run for other solutions like Swappa or these like DEX rotors. And then talking a lot with Nadine, we recently, like 1-2 months ago, had like this proposal of like having a Uniswap, like I don't know, $5 million pool in between Celo dollars. So it's interesting how the algorithmic solution, it's kind of beautiful on the paper, but you had to decentralize using other kinds of networks in sort of having liquidity. So the solution is not just the algorithm, but the liquidity network. So I would like to have like some lights on it. I don't know if my question was clear.
No, it's perfectly clear. So I think it refers back to, yeah, the thing that you mentioned earlier, like the flywheel here again. Like the problem is with decentralized stablecoins that it's very hard to have a stablecoin which is, you know, very liquidly trading, where you have low slippage if you go in and out massively in like a single transaction. But at the same time, you don't have really much real world demand. The problem comes from the fact that you need oracle rates, which are supposed to be, you know, the smart contract needs to be able to trust those oracle rates. Now, the technical thing here that kind of limits the liquidity that you can give to stablecoins which are not well demanded comes from the fact that you could manipulate the oracle rate pretty cheaply, right? If nobody trades those in the market on, I don't know, Coinbase or wherever, this oracle rate can be manipulated really cheaply, and then you can go the other way around in the smart contract, right? Because the oracle rate is basically off, you can make now a profit against the reserve. So basically, this is definitely what the core, I think, shortcoming of Mento as it currently is, live on a testnet. And pretty much all our engineering efforts right now are directed towards solving this. The solution basically to this is to actually not rely on these oracle rates anymore. So the way Mento currently works for all the stable coins that we have is that you need a Celo, because that's kind of the main token in the reserve, a Celo to fiat oracle rates for every stable coin. So for the Brazilian real, we need a Celo to real oracle rate. So we can set the amount of Celo you get for sending one Celo Brazilian real back to the reserve, such that it's a one-to-one transaction. Now the problem from that system is, as I explained basically, but now in more detail, the Celo to Brazilian real rate that you can get on centralized exchanges is just very, very illiquid, right? And it's very easy to manipulate this rate. So it would be just a parameter change to basically give everybody the opportunity to exchange with the smart contract without any slippage, right? We could just do this right now. We are a governance proposal, but it will just be too risky because now people could attack the system by manipulating this rate. And the solution that we are building right now, and we're going to code audit very soon, like hopefully this month still, we call it MacMint, you know, like multi-collateral minting, a bit, you know, in bit relying on like McDonald's kind of terminology here, I guess. So with MacMint, like the solution we identified here is, well, we need to get away from relying on these oracle rates, which can be manipulated easily, right? And the way to do this is to actually allow FX swaps, basically. So if you have one oracle rate which can be trusted, right, which is like a US dollar type of rate, that is pretty hard to manipulate because it's very liquid. And then you have FX rates, so the actually US dollar to Brazilian real fiat rate, right, which definitely cannot be manipulated. Like that's trillions every day. Then all of a sudden you can basically take out this part of the oracle system that is easily attackable, and you can create a stablecoin. You can launch a new one for which there is no demand at all. You can still provide basically no slippage, even if people want to go in and out like 10 million in a single transaction. And that's kind of what we are trying to launch as soon as possible with this MacMint upgrade. There's some stuff on the forum already on how that works. And yeah, hopefully early next year this is live. This is, I think, currently the timeline. But yeah, definitely with the currency for which there is not a lot of real world demand right now, it's kind of hard in the current system to create that liquidity. So we are aware of the problem and try to address it.
Just also like be reassured that in our team we have some of the smartest people that also invest a lot in Luna. So just as a point, yeah.
Is there? Oh, we have Anish.
No.
Hi, can you hear me? Great. First of all, thanks a lot for all the value you are bringing to us today. I have a question. So, with the arrival with the CBDC, is it conceivable, at least for you, that they could be integrated into a protocol, like, for example, Curve, and that the state would be able to incentivize the various pools to boost, for example, their currency and attract liquidity or not? So central banks would apply like monetary measures activated via DeFi.
Governments bribing for liquidity.
Yeah, that's definitely something that we're looking into, and we are will be welcoming. This is definitely not letting the Trojan horse in the house, but we've seen this type of behaviors on institutions level. So Gemini, USDC, USDT, but also some other type of stablecoin that are quite linked to the governments that have been buying quite a lot of for example, Curve CRV token, and are using it to incentivize the pool. And actually, they are among one of the biggest whale in the system, because it's no secret that if you are building a stablecoin, you're pushing the stablecoin for mass adoption. The retail is unfortunately only interested in the yield. So the biggest yield is bringing the biggest users on the retail side. I'm not talking about more advanced users where they will also measure and counterbalance the risk, so of using certain types of stablecoins. But yeah, that's the reason also as TechDAO we built liquid lockers, is to be able to, we have for balancer, we have for APY, we have for a Curve and other type of assets. And what we're trying to do is to accumulate a certain amount, sufficient amount of those governance tokens, because we know that those governance tokens will be playing a major role in DeFi if DeFi succeed. So for us, we have to accumulate as soon as possible, because then you will have big players playing those type of market manipulation or incentivizing one way or another. So yeah, it's also a threat to DeFi component, because we don't necessarily have access to that huge amount of liquidity that those guys have. So we'll need to build system and protection, put protection in place that can guarantee that we're still, as builders, in control of the protocol and the vision of the product that we're trying to ship, and also letting other people to interact with the protocol. And it's a huge problem. I don't think we have the solution yet. We tried. Remember, like a couple years ago, people were talking about DAOs as being the solution to everything. But now we're moving a little bit more into normal companies and type of things, because DeFi and DAOs are chaos type of implementation, and a lot of toxicity, and also a lot of influencers, pseudo influencers in the world, in Twitter, that are telling people to do certain things. We have built a protocol, liquid lockers, to also use bribes. Bribes is also something that can be dangerous in one way or another, because you're basically using extra power, governance power, to allow certain actors to join a platform, to deploy a pool, to deploy a certain product. So we, as a community, we thought that we will bring a new system, but the reality is like we're replicating the existing system with, for example, in Europe, the parliament, commissions, and then the lobbying that are offering bribes to actors to do certain things. It's interesting. We're innovating, but yeah, it's also, we have to be aware of the tools that we are building and delivering to people, because they can also be used against us, like any kind of revolution, I guess.
So if there are no more questions, we close the panel. Maybe a round of applause for the amazing guys. And maybe we'll take a quick vote to know who wins the merch, but we'll do it offline.